Good evening, all. We, on behalf of the SRECAA Alumni Association and the Department of Information Technology, welcome you all for the 96th webinar talk, Transformation in Financial Services Ecosystem, a bird's view. Principal Ma'am has conveyed her wishes for this event. We welcome speaker of the day, Mr. Jose, faculty members, current students, and all our alumni friends. Mr. Jose completed his B.Tech IT in 2008. He's a functional resource with 14 years of experience, ranging from startup to financial institutions. Core skill includes driving risk programs on business and IT side, cross geographical exposure to financial markets in UK and Europe. A bit agile practitioner with strong penchant for technology. He is currently principal business analyst and data management at Society General, Bangalore. Over to you, sir.
Thank you so much, Vasanth sir. So for the quick introduction, and before we start, so I think I would really wanted to thank. I think I've seen most or some of my professors who who helped me to learn the basics back in 2004 to 2008. So it's really a pleasure and honor to have this opportunity. Thank you, Kalayasan sir, for reaching out to me. And like I think Thomas sir had mentioned, like it's not about the alumnus spending 45 minutes for the institution, but it's really indeed a pleasure for us to give back to the society and also to the college that that has shaped us a long time back. So with that being said, I would really love to thank all the professors, and also I see a lot of alumnus have also joined on the on the call today. So I would like to thank everyone who made special time to be part of this webinar this week. So thank you, everyone. So with that, let's go into the topic of discussion for today. And since I don't have any pre-prepared material, so let's don't hesitate to raise any questions or points that you might have during the tenure of the presentation itself. So we'll do a lot of talking. Let it be a two-way interaction. So with that as a context, so we will directly go into the actual topic for today. So so briefly, I would like to speak a bit about the the banking and the financial services ecosystem. So it's not a topic of something which is difficult to understand or difficult to relate. I think everybody on the call, off the call, is either way associated with the with at least one of the sides of a banking which impacts us in some way or the other. Right. So ideally, we are all very closely connected in an economy which drives us based on I think broadly classified as import and export. And then the entire economy is driven, and there are multiple levels of governing bodies, and also there are special economic bodies which are called as banks or financial services, which helps us to enable the smooth flow of cash within and outside the overall economy, right? So it's a very common topic in terms of any layman or for anybody of that for that matter. So now primarily I think in this last I think honestly with my very humble experience, so what has been happening with this ecosystem, so it has been like any other industry or arm. So it has been going through a lot of evolution in terms of what we call as a transformation phase or transition phase, which is kind of happening and in different ways. So it could be argued from a business point of view, it could be argued from a IT point of view, or it could be geopolitical driven, like even the ongoing Ukraine crisis can also have an impact on what we do and what are our balances in our account in the current scenario, right? So not going into very in depth of nitpicking what would be the probable impacts, but I would like to keep this as at a high level, like take a step back and look at what are the major things which are happening around us in terms of the the banking or the financial services ecosystem, right? So broadly, if you see, there are three major things which are primarily pioneering in the last couple of years, or the last 3-4 years, for that matter. I think most of the alumnus who have also joined the call, some of them could also be contributing on a banking domain related IT work, or even they could be contributing on the front office for a bank. So so in that way, so to start off, one of the main things that has happened in the last few years is the oldest delivery channel that we were aware of, when we grew up, or when we kind of started going to bank, etc., is the physical branch, right? So there is always a kind of nostalgic that you get when people talk about credit debit, or people talk about let's say taking a demand draft, or some basic operations that a retail banking customer would need, right? So physical branch is something where at least for me, it's more like you have a stronger association beyond the relationship that you have with the branch, right? So you might personally know that the manager there, the clerk working there, a lot of things happen beyond your because that's where you discuss about your priorities. Maybe you're looking at taking a housing credit, where you're looking at building a house, or whatever important financial decisions that you're taking. So there is a lot going on in this place, honestly. Most of them, and it's a place of it's a two-way. It happens both the ways, right? So this physical branch, right? So based on the transitions and the transformations which are impacting in the last, I think, like I said, 3 to 4 years, it is going through a complete change or a makeover, where either it is currently being run without people, or sometimes even the physical branch itself is kind of disappearing, right? Because everything is brought in a different silo. Maybe your entire needs or services is taken care by internet banking, or maybe you have a relationship manager appointed, and there is a larger impact which happens on the physical presence of a branch itself. So now this phenomena is quite aggressively looked at in different countries. I think, see, India primarily, we look at we have a huge presence for the retail banking side, right? See, apart from that, we do have wealth management, HNI customers, and all this stuff. But when you look at maybe a little bit on Europe, so where they feel the cost of setting up a physical branch, or the operational cost, is kind of little high, right? So that's when they try to go for they take technology on their side to kind of let's say automate things, or come up with I don't know, like chatbots, or certain arms of technology which can aid more efficient operation with lesser human interaction. Like most of the things that you see which is happening currently, you need not have a physical a customer on the support side to actually interact with you, because basically preliminary questions are scanned and addressed by a chatbot with a I don't know, which is very well implemented with the data set, well trained, and then it caters to most of the things that you're looking for. And then if that is not sufficient, it is taken to a next level, where a actual person interacts with you, right? So with little bits and pieces of information that I was able to grasp, and and me being contributing on the domain for since the last 14 years, I can actually see this happening. There are banks like ING, which is primarily has the headquarters in Netherlands. So they have started looking at opportunities to bring down the operating costs, basically, like I said. So that's when they get away with little bit of delivery channels, physical branch, and so on. So this is this is a bigger transition, but I'm not saying immediately, these are some things which are which are planned for, like, Q3, Q4 or something of that sort. But this is kind of happening elsewhere, but very sooner it could be a reality where we have things of we have one stop solution for everything that a customer would need or a counterparty would need, maybe via entirely a different channel apart from having a physical branch. Right. So this is one of the key things which are being even looked up by most of the banks, and also some of the regulators are also keen in putting a lot of emphasis to have a balance between having a branch and not having a branch, or how do you want to work out. So of course it varies from country to country, and it also primarily depends on which country or region you're operating your business. So that's a predominant change which is on the roll, I would say, basically. Okay, so with that being said, there is a second interesting point which is also happening to the financial services ecosystem. So earlier it was known banks. For us it is okay if we take the vicinity of India. So for us it's got to be like SBI, Union Bank of India, and all this public sector banks, and a little bit of private sector banks, and so on. So now, with a lot of scope for the industry itself, you can always see there are you know other players getting into the business of lending, right? So I think most of us would agree. We have Amazon Pay. We have I don't know. Mahindra has gotten to financing activities, and Reliance can get in, and you never know. Anybody can get into any business, right? And the banking or the financial services business is a lucrative business, with and it also comes with its own what do we say? I mean, it has got its own responsibility towards stabilizing the economy and running it more efficiently, right? But so the idea, or the point important point here is, we don't have a restricted amount of players now, right? So what we have is, like, nobody can have a monopoly of the market. So now it's more like it's quite open, and then it's seen potentially as a bigger opportunity, wherein a particular parent company can have separate entities and then start getting into this business. And of course it comes with its own challenges. For example, a question which might come, or which is broadly discussed, or argued or debated, is, for example, we have some of the foreign banks like HSBC, we have RBS, you have so many other foreign banks, City, right? So some of them, they don't get into the art of retail banking business, in India. So the nitty-gritties is, if you look at a little bit deeper, we are primarily governed by the central bank, which is Reserve Bank of India, right? So when you actually sought RBI to get your license, so there are lot more KPIs the particular entity or the organization is expected to meet. For example, they will give a target to meet the CASA ratio, which is the current account and savings account, or they will also ask the particular bank to cover the we call it as financial inclusion, right? So it's basically bank the unbanked population part, right? So such things are proving a little bit trickier, or maybe it doesn't give them the return on investment of doing the business. So that's exactly the reason why you guys keep hearing in, I don't know, Economic Times or Times of India elsewhere, that they keep selling their businesses to other banks in India. Like you might have heard, RBS has given up its credit card business to, I don't know, XYZ, or HSBC has moved away from doing the wealth management business in India, and so on. So it's mostly volatile, with the approach being taken by predominantly the foreign banks. But nevertheless, the general approach that our public sector banks have is, I would say, it's quite conservative. It's very conservative. In fact, their risk appetite is quite below average. That's why even during the 2008 subprime mortgage crisis, uh, the public sector banks or the banks which are operating within the vicinity of India, they were not much touched. They were still, their balance sheet was good. They were still solid enough to face any repercussions. So that's how the entire banking system operates within India. All right. So now jumping back to the second point, what I wanted to highlight is, like I said, gone are the days where we had a clear monopoly of a particular, bank to, hold a particular market. So now with this kind of scenario and opportunities, any organization with a strong appetite for doing the right business of banking, they can actually find a good place and compete positively with other players also. So this changes the entire trend that has been there since the last, I don't know, last decade, I would say, because even for the public sector banks now, with RBI is push to maintain a minimum working capital according to the Basel guidelines. So most of the banks are merged, right? I think roughly we just have 6 or 7 banks. Earlier, it used to be a lot of banks like Dena Bank, Corporation Bank, and so and so. Right. So the point here, or the takeaway is like, the entire area to play is changed. Okay. Now the game is different. We cannot have the same set of rules or the same set of strategies which were working in the past. Right. So this is very, very interesting, and it's quite happening in a rapid pace. So another important point which I would highlight as the third and foremost important point in the banking ecosystem is something that we call as neobanks, or if you might have heard, they are referred to as challenger banks or even fintechs, right? So fintechs or challenger banks, so they create a different line or a segment within the entire banking ecosystem itself. So for example, my based on my personal experience, whenever we use the retail banks which are within India, so we are aware of NEFT, RTGS, and now that with advancement of technology, you have, I don't know, IMPS and instant transfer of funds and all this stuff, right? So now these are the kind of banks. uh, they are actually tech companies, they are not banks. So what they do is like they come up with a product, right? So that completely sweeps the entire way banking was done till now. Okay, so maybe I'll give you an example in this regard. So when I was actually working in Europe, so there was a very logical need for me to transfer funds from France to India, right? So I'm looking at transferring it from euro to INR, basically, right? And the bank, or the foreign bank whom I was associated with, they used to charge me, I don't know, like 13 or 14 euros for a transfer of 100 euros to India. So which is at 13%, which is quite high. You know, that's when I looked at some alternative. So you have all this challenger banks or so-called neo banks, like Skrill, TransferWise, I don't know, Mongo, not Mongo, Modo, and there are, I think, around a lot of banks like this. So where you can perform the same transfer of euro to INR conversion, within 2 hours, and they charge you a very, very nominal fee of €1. Okay, €1. I mean, it's insane, and they were able to do it because of the push from the technology itself. Okay, so now, as you see, I mean, from my point of view, I also work for a bank, so I can see a lot of customers who are a loyal customers to us. They sort of to a different channel, which is providing them a up top service, right? With very, very lesser cost. I mean, it's negligible for me, and it's secured. It's completely secured, and there are cases where you reached out to the customer care, and I did get instant response. Everything is properly done, as per the regulation, and they do have a regulatory team to take care of the implementations to be in line with the rules and regulations which are in the specific region. So this is just a simple example, but there are a lot of things which these guys create. Okay, so which means now we have two things which are going in parallel. So we have the traditional banking, which is still existing, and you also have these guys which who kind of disrupt the entire proven chain, right? So for me personally, they are coexisting right now. But given a point, there will be a certain stage which is also happening. Like, I can see these banks are in a spree to take over such companies, right? See, you just have to compete, or you kind of acquire. So I mean, that's what history has even taught us in the past, right? So there has been a lot of acquisitions which have been happening by these traditional banks or bigger banks. With these fintechs coming into picture, they become robust players, so that's a very very important focus, where I could see real time settlements happening uh, with cross border between continents or countries is actually amazing. I mean, I'm not saying it's been happening since the last 2 3 years, but in the recent current year, it's been pioneering at a very faster pace. So which will put a lot of competition in place, and also the way strategy is placed for a particular banking ecosystem. And end of the day, what it means for a layman is absolutely, you also are expected to have the quality of to keep ourselves updated of what is happening in the market, because I myself need to use these services, and I should be aware, like, where I would get the better service with a comparatively a lesser cost, and it's also dependable or secure, right? So this trend is kind of changing the banking or the financial services ecosystem in itself overall. Okay, so primarily, if you see, if I have to go back, we spoke about three important pointers, I would say, in terms of a few things disappearing, as a point one. And second thing, you have uh, non-banking players coming into picture. And thirdly, it's actually different from the point two, which is like tech companies getting acquired and taken over to actually pioneer the overall performance of a bank, or getting into the lending activity itself. All right. So these three actually play a major role in kind of transforming the entire ecosystem. But this is not limited to these three. And there are certain other factors, but possibly looking at the majority of the things, so these three play a vital role if we have to prioritize in a bigger list, right? And so with this, being said, I would also, maybe it just struck my mind while I was speaking about the fintech companies. I happened to hear about this country in Central America, El Salvador, right? So, they've actually given up their own currency. It's like we giving up, INR, which is our legal tender, right? So the entire transaction is happening with Bitcoins. I think the moment I say Bitcoins or crypto, I think most of you or all of you, are well aware of what is happening with them, or at least have a basic understanding of, what are these, and now we have come to NFTs. I don't know what else is in store for this, right? So this country, I mean, just an example, like they do all their transactions with Bitcoin. The prime minister himself actually vouches for the credibility, right? So now this puts a very, very important question. Like, we are not that far away from a time where, we're talking about euro to INR, USD to INR, and all this stuff. So maybe there could be, it could happen quite sooner, that we could all depend on a single, I don't know, maybe a logical, currency, which will be, very, very secure in terms of holding it, and also your transactions are again very secured, and it also has a good credibility in the overall market, right? So we are definitely not far away from that scenario, right? So because countries have started experimenting, people have started using it. But I'm not getting into the space. There is a small space here where cryptocurrencies or otherwise, they are still not regulated, right? So that is something which is being debated and discussed in different regulatory by different regulatory bodies like BIS in Switzerland or ECB or other major central banks. But I mean, people can see the reality happening, right? So you go buy a juice and then you can actually have the settlement done with a Bitcoin. And I was also surprised, they in El Salvador they also have this POS or ATM machines where you can actually go and convert your USD or anything with into Bitcoins, right? So these are quite amazing to see what how the entire trend is changing, right? Where the I know it's a little difficult in terms of the thought process that we have, but still reality is something like there's a lot of things where critically IT being sought as enabler now is kind of like the disruptor, and it is taking over the driving the entire things in the ecosystem, right? So that's one of the thing which came to my mind. And another one, just to highlight a little bit, for example, again I think the other acronym which are also being sought after by the central banks, they talk about this term called CBDC. So it's nothing but they call it as central banking digital currencies, right? So there is actually a positive plan by major central banks to actually start issuing digital currencies. See, of course, this is not the time where we talk about going paperless, because we are already paperless. I think some of the stuff which we would have ordered today, maybe in Swiggy, Instamart, and all this stuff, so we would have actually used, I don't know, Paytm or any other payment. So we are already paperless. So there is no point in placing a lot of emphasis on paperless. But now the momentum is they're looking at establishing something called as digital currencies, so which is nothing but CBDC, central banking digital cross-border digital currencies, I'm sorry. So this, I think they've also done a pioneer settlement. I think it's called Project Jura, Jura. So if you, I mean, maybe after the webinar, if you can Google it, I think you'll find a very crisp presentation, and it's quite interesting. I think they've involved three or four parties where they have done the real-time settlement with the use of digital currencies between, I don't know, a bank in Europe, which is called Natixis, a bank in Switzerland, the central bank, which is SNB, and to another bank. So the entire settlement was done in, I think, 1 day or 2 days. I'm not sure about the exact time frame, but it's really amazing what opportunities can be unlocked with this digital disruption which is happening not just in banking but even in other industries. So so I mean, from my humble perspective of in the last, I think 35 minutes, if I may say, or maybe 30 minutes. So we did speak about a lot of points. I think in terms of what is happening to the financial services ecosystem, or what are the challenges it might face, and not just challenges, what are the opportunities it can have, and how even me or you who are actually the end users of the services are or will be impacted in the near future, right? So that's something which I think it amazes me, even myself being in tech. But nevertheless, I think it's something which I think even people should be aware of, to keep them well equipped of what is also happening within this industry. So which will actually give us a good idea of what are the things to expect, and not putting us in a bad surprise, for that matter. So so yes, I think these were the few important points that I would like to, or I really wanted to highlight during this webinar, which are, I think, very specific to the banking. and also on the IT side. And I think like most of you will agree, I think with the propelling factor of IT coming into picture. So I did not go into the topic of digital transformation. I'm just talking normal transformation in the banking ecosystem, because that's another vast topic which has been in the industry since last 3-4 years, and that has changed a lot, the way IT is supporting the banking or any other industry. So not getting into digital transformation, I'm just taking a step back to just highlight in the last 30 minutes about what are the major things that have happened, and how we might be directly or indirectly impacted because of this. All right. And okay, so I have been monotonous till now. So maybe I'll be happy to hear from you all if there are some specific questions. If there are something we can discuss about, argue positively in a healthy way or something. So I'd love to hear from you.
Yeah, Jose, that was a wonderful presentation. Thank you. And yeah, really a bird's view on the financial transformations. My question is a bit general. And
Yes, please.
since you are been into different countries and right now in India, as a customer to the bank, I feel the interest rates what we get for deposits are very low.
Hmm.
uh, it's like almost now 4.5 percentage
Yes,
and if a senior citizen it goes up 6.25 something like that, but still.
yes.
So when we compare with other countries, is there any scope to deposit some money in other country bank, uh, or because you have been into different countries, like I
Yes.
want an opinion about that and the
Yes, Thomas. I
possibility.
think that's a really interesting question. But honestly, I think based on my humble experience, Thomas, what I've seen is I think if you take Europe in general, not touching the North American countries, primarily I think for us it's either Europe or North America, right? So we don't. I mean, no offense to South America or elsewhere, but with that being said, primarily Europe. I think the inflation rate is nearly nil. You I buy something. Actually, the first time I'd been there, it was in 2012, and I got I don't know, a drink in a normal store. It was costing me €2, and now in 2020 I got the same thing. It actually cost me the same price. It's like €2 or 2.1 euros and the same thing. And also, if you look at, I have one real-time example. It'll amaze you. One of my close colleague, he has actually he came with me, and now he's kind of settled in Paris. He works with Societe Generale in France, and he has closed his loan in India by taking a loan in France. I'm not lying, huh? It's a fact, because he has to pay, I think, around 1%, or I don't know, it's even negligible, somewhere close to that, wherein he was, I don't know, here he was paying close to 10 or 11%. So he did do that. So he got the bigger loan, and he kind of made a transfer, and then he closed his loan here, and then he's paying the EMI there. So to come back to your question, so there, in terms of the deposits and other things, it's very low. It's very low. But the other thing to see here is, Thomas sir, I mean, when we look at the interest rate, for example, in India, if you say 4.5 or 5%, uh, see, basically how the retail bank works is, you accept money from customers in terms of deposits, right? So that is like, let's say, like you mentioned, 5% or 6%, and then you lend the same money to another set of customers in terms of loans. So that is where you give it out to people in 10%, 11%, or 12%, right? So this delta is where they earn the business, or bank earns the profit for a retail banking segment, right? So in that way, I think it always makes sense to with RBI's monetary policy which comes out. So they always try to regulate this so that they have a clear balance between this, and make sure there is also balance with which the banks can earn some profit, but at the same time, your interest rates are also justified. So I think just looking within the perspective of India, I think it's completely, like I earlier mentioned, it's conservative approach. So you will never have a very drastic increase in interest rate where you will move away from mutual funds or other ventures, right? So but a honest question to your answer to your question is probably no. I would not park my money in any other country just for getting a higher interest. So yes, I hope my answer was a little clear to you, Thomas sir.
Yeah, thank you, Jose. Anyhow, you have given me a clue. Thank you so much. Yeah.
Yes, thank you. Any other questions?
Jose, thank you very much. You have done a wonderful job. And about
Thank you, sir.
the cross-border digital currencies, is totally new to us, and it is
Okay.
a really an eye-opener for us also. Can you
Yes.
elaborate something on the cross-border? Already you have told what are
Yes.
actually how it
Yes.
is used with the other countries. Can you elaborate
Yes.
about that?
Sure, sure, ma'am. Actually, I mean, if you also see, banks or any organizations, they also issue bonds, right? So maybe it could be certificate of deposits or bonds for the companies. And now, with all this CSR or the corporate sustainability and responsibility, social responsibility coming into picture, uh, c- banks are advised or they are focusing on issuing greener bonds, they call it. So which is which helps them to do the business, and at the same time it also contributes to the overall fighting the climate change, or contributing to the overall welfare of the presence of any nitty-gritties which needs to be addressed at this stage. So now, in similar lines with this, CBDC is something which primarily is looked at by the global regulators. So when I say global regulators, ma'am, so we are talking about BAS, which is like Bank for International Settlement. They have their base in Switzerland, and for example, we have IMF, International Monetary Fund. We have World Bank. We have ECB, European Central Bank, and all these guys, US Federal Reserve, and so. So what happens is, like when we look at the global regulators, they are looking at issuing digital currencies. So in simple layman's term, it is again a legal tender. So for example, I'm looking at issuing currency which is like INR. So that is my legal tender. So now these banks or the central banks, they are maybe putting in a kind of a pilot or a proof of concept in terms of using digital currencies. So which means it's the same like currencies, but you do the transaction or settlement in a different platform. So that's where the tech part come into picture. So for example, we talk about basically blockchain technology, where I think there is no mediatory required. So when we talk about CBDC, ma'am, there is something else which come to my mind since I spoke about crypto or bitcoins in general. So there is another concept called DeFi, which is decentralized finance. So this concept, what they're saying is now we don't need a bank, because I go to a central cryptocurrency where you and me can have a transaction which is secured and anonymous, and also maybe like I said, it is still not regulated, so we can still do it, and it is safe, and I own my share and you own your share if you are the buyer and I am the seller. And now, if this, I mean, this is already in place. So if it is getting properly regulated, we will have soon banks also disappearing, right? Because now we need banks as a middleman to do the settlement with somebody, because I send you money, it goes through a bank, and then it for me it's a debit and for you it's a credit. So now with this technologies like blockchain and other things, so we don't even need the concept of a bank. So that's even trickier to imagine, but they're working out a healthier way to work such logic, which is like DeFi. And coming back to the digital currency question, so like I said, it's just a legal tender like INR or USD, but only thing is it's in the digital format. It's not in our a paper format or whichever way. And with that, how we are going to do a settlement is between countries. If you see USD to euro or something, it becomes a little bit tricky because forex rate comes into picture. But if you have two central banks agreeing on a common digital currency, then you are getting away on the forex exchange rate and so many other I would say barriers which will cause delay in the settlement. So that's basically that is being worked out as a pilot. And they've done a project which is called Project Jura, like I mentioned. I think they've given a lot of documents, but I would suggest there is a very crisp 5 or 6 minute video on YouTube. If you search for Project Jura, that very clearly says how efficiently they have done it, and they're also looking at little bit refining it and then taking it to next level kind of a thing, ma'am. Yes.
Thank you. It was really a wonderful explanation. Thank you.
No,
Thanks a
no
lot.
problem, ma'am. Thanks.
Josh?
Yes, yes, sir.
Yeah. I think it's a vast area. I hope. I think you have touched on a piece of an iceberg.
Yes, sir.
I think we need some more hours because every student
Yes, I
now
know.
going to
I
touch
know.
this part. They're going to do a lot of projects in the company regarding this banking only, of course.
Sure.
Okay. So I think we need some more sessions in future by having a webinar or a small workshop or whatever it may be. I think if we need your
Sure, sir.
valuable time in future.
I think,
Okay.
sir, I think maybe
So
the next
definitely,
time
I think we need some more time.
yes, no, next time I also visit, Coimbatore, I'll also keep you informed, sir. If possible, I'll also, love to meet the students. If somebody is interested, maybe I can, try to work with you to get some slot with them. I'll be really glad to do that, sir.
Many of the students, yes, Josh, yes, Josh. Many of the students may think that it is a small, again, what is a back in banking, that's all.
Yes.
But at the background, I hope a lot of things are there.
Yes.
Conversion or how you're going to make it as a software
Yes.
or how you're going to make it as in coding or whatever things. Okay, it is totally a challenging one. Hope the students might have a nice experience in this session.
Sure,
Many
sir.
more to come in the future. Thank you, Josh. Thanks a lot. Thank you. Okay.
Thank you. Thank you, sir.
Thank you. Thomas, anything else?
Sir, if there are any questions from audience, we can take it.
Students, if you're there, you may ask the questions. Second year, I think the students are there. May ask about the when third year is there. So do want to do a projects or going for a placement, you can answer.
Sir, I think we'll arrange one more session with the students so that how the currencies can be used in the financial section and all. I think we'll do some other time.
Yes. So, if there are no other questions, Jose sir, Selvi ma'am, and Vasanth sir, shall we go for the closing remarks?
Yes,
Yeah.
sir. Yes, Thomas, sir.
Yes, we can go. Yeah.
Thank you. So that was Jose Raj of 2008 B.Tech IT alumnus. Thank you, sir, for joining us and giving an insight about the transformations in the banking sector, financial sectors. Thank you so much. SRECAA Alumni Association is proud to host you for this webinar number 96. So we thank you and show our sincere gratitude to the Department of Information Technology, Selvi ma'am and Kalayathu sir, roping in Jose Raj of 2008 batch to this webinar series. Thank you so much. Thank you, audience. Thank you, student friends. Thank you, alumnus from all over the globe. We had Anand from US in this call. Thank you so much. It is early morning there. Thank you so much, Anand, for being here. And thank you, faculty members, for joining in numbers. Thank you, Ananda.
Yes, and one last word before we wind up. So thank you so much again. It's a it's a very wonderful opportunity, honestly for me, and it brings back a lot of good memories with with the staff who have taught me. Sendamil Chelmi ma'am, I can see Karpagam ma'am, Anita ma'am, Kalayar sir, and a lot of others also. So I think I'm really humbled, and hopefully I think once I'm back, for a once I'm visiting back to Coimbatore, so I'd like to get in touch and then meet them also in person. And also thank you all for the other alumnus who have taken time to join this webinar on a Sunday, and also for the second and third year guys and girls who have taken their time to join us for this session. So thank you all, sir. And Preeti Harris ma'am, yes, thanks to you too.
Thank you, Joseph.
Thank you, Jose.
Thank you.
And thank you,
Thank you,
alumni.
Jose. Thank
Thank
you.
you.
It's a splendid experience.
Thank you for the nice words, Jose. We'll see you in Coimbatore. Thank you.
Sure, ma'am. Definitely. Yeah. Thank you so much, ma'am. See you all. Bye.